will come with them. So there are some things that you can do to perhaps maybe smooth it out, smooth out your returns. So since we're taking a look at moving averages, in this case, exponential moving averages on a shorter term chart, why not add the MACD to it? And you can see that the MACD is added to it. And this essentially has 4 moving averages and shows you the convergence and or divergence of those moving averages. So when you look at this crossover here, which also was preceded slightly by this crossover here, which was negative, a selling opportunity, as it were, one thing that you may want to look into, remember, support and resistance, that's the basis of most trading systems. And you can see that we had to worry about that there. So the question is, was this a viable signal? Not really. I mean, yes, it worked in Bitcoin a little bit, but at the end of the day, it really has a little further to go before it breaks through support. So that might keep you out of that. And quite frankly, a lot of times support and resistance should be the first thing you look at. And it can be a great filter if you pay attention to it. So right here at the 30,000 level, you can see that we had bounced and then bounced again. Well, notice this signal here. From a very low, kind of oversold negative position, we crossed over, and then we got a crossover on the chart. Well, both of those do suggest you should be buying. Then on top of that, when you look at it, I'm zooming way out, but we are in an uptrend. So that is something to pay attention to as well. Traders a lot of times would take a look at this and take a look at this. And then they say, okay, well, it crosses here and it crosses there. So MACD got a little overdone. You could take your profits there or move your stop loss to break even, as it were. If you get in here, you probably put your stop loss behind the most recent price action. At this point, maybe you're to break even, so you have your stop loss there, and then you just let it run. So that's a pretty viable way to trade this market as well. Let's go ahead and go to the daily chart. And, this is basically the same trade here. You can see that we crossed the 0 line here just as we were crossing there. So that sets this up for a pretty interesting place to take a breakout trade, which we got. And it ended up being a long-term. I mean, if you got in there, you're sitting pretty. You've quadrupled your money, really, without any leverage whatsoever. So definitely something to pay attention to. Let's take these off and let's take a look, since we're on the daily, let's take a look at a couple of simple moving averages, that 50 and that 200. So I'll make the 50 red. I'll make the 200 black. So you got a golden cross here, but the MACD was going in the opposite direction. And that's going to be one of your biggest problems. This was a great signal to go long. And we got a cross there in the moving averages, so that makes sense. This was very flat for ages. It just really fell asleep. And then as you look here, you got a 0 line cross here. You broke back above the 50-day EMA, or SMA, sorry. You also cleared resistance. So once you got to this candlestick, this gave you a heads up as to what was going to happen. And then you just took off. Something else that I would point out is these bigger moving averages, 50 and the 200, which are two of the most common ones, a lot of times attract attention. You can see that there was a little bit of buying there and there. So it's not a huge surprise. Doesn't mean they have to, but when you're in a trend, they do tend to do so. So this is Ethereum daily chart. Let's take a look at the MACD initially. I mean, you can see that we crossed all the way down here and then crossed again. Once you break above the resistance that was formed basically there, $500, we came back. We pulled back to retest it, kind of went sideways for a while, and then you can see the MACD took off. It crossed a couple times and then started to fan out and go higher on the moving averages. The histogram got wider. So that was a signal in and of itself. We can add the couple of moving averages. Let's make the 50 red. You can see the 50 is held quite nicely. The 200, I suspect, isn't going to come into play at all, really. Other than the fact that, from a longer term perspective, it does determine the long-term trend. And once we broke back above that 200 and then the 50-day EMA crossed back here, you can see that the momentum shifted. The MACD does not confirm it, but clearly the 50 starting to come in and offer support multiple times, 1, 2, 3 times on the way up. So definitely worth paying attention to. Now, it's not just moving averages and the MACD that you use to trade with. And this is especially true with moving averages. Moving averages can be very helpful to determine the trend. You're obviously in an uptrend, potential support. But as we go through this course, we'll talk about patterns and candlesticks that you will use based upon support or resistance, the 50-day EMA, for example, and then a candlestick or a pattern that suggests that we're going to find buyers there. And then that way you have a confluence of 2 or 3 or 4 things, possibly. So moving averages are important, but they're not the be-all, end-all. And I do not want you to think that just because the moving averages has crossed over the other one, that you should just jump right into the market. There's a lot